Good afternoon, everyone. Thank you so much for joining us today for our Health Savings Account webinar. My name is Melissa Cook. I am the Director of Sales here at Triton Benefits and HR Solutions. Before I introduce my co-host, just a little bit of housekeeping. Please note we will have a few polls and question breaks as we move through our presentation. So please use those allotted times to message us any questions that you might have. Now, I would like to introduce to you our co-host, also from Triton, Olivia Hanlon, one of our in-house benefit consultants, and from HealthEquity, our subject matter expert, Cecilia De La Rosa.
Thank you, Melissa, and thank you everyone for joining us today. I'm Olivia Hanlon, and we're very excited to get started and share what we've put together for you all, but also hear from our audience members. Before we go over the agenda, Cecilia, could you tell us a little bit about your time with HealthEquity?
Sure, absolutely. Welcome, everyone, and I'm as well so happy to be here. I love talking about health savings accounts. There are just so many benefits to this, and so I think this is a great opportunity for us to all chat today. So I've been at HealthEquity for the past 5 years. I am a certified health savings account expert, and I frequently do continuing education seminars for insurance brokers in the Northeast.
Great, and thank you so much for joining us today as well. So moving forward onto our agenda, let's see here. So basically what will be going on is we'll break down the basics of HSAs, go over eligibility and how to determine if it's right for you and your company. We will then go over the life cycle of HSAs, starting, terminating, as well as life events that could affect your account. We will then move on to our favorite part, discussing tax advantages and saving potentials. And last but not least, we'll go over some case studies and as well as a list of qualified medical expenses. All right, so for first question, we're going to get an idea of who we have in the audience today. But if you could please chat us and let us know if you have an HSA, if your company offers an HSA, yes, no, or that you're not sure. So take a few seconds to let us know. All right, we kind of have a mixed bag going on. It looks about 65% have HSAs and the rest do not. Pretty much everyone's sure if they do or do not, which is pretty good, I think is a good start, right, Cecilia?
Absolutely. Absolutely.
All right, so real basics of HSAs. So they were created in 2003, and they're basically an account designed to put your own money away and use it for qualified medical expenses. You'll hear us using QMEs to make it a little bit easier. And with this comes the advantage of the money rolling over year to year. Cecilia, when we prepared this, you said something that stuck out to me that I had to share with everyone, and you described it as a health 401k. Could you elaborate on that? Because I think that really hits home.
Sure. Yeah, I love that phrase, calling these health savings accounts a healthcare 401k, because, that's a good way to think of them. They're certainly an important benefit that helps us pay for our healthcare expenses, but health savings accounts are also an important financial vehicle, and I think it's really smart to think about them that way. So we often compare them to a 401k. You can make your contributions into an HSA pre-tax. You can invest it, and the investments are also tax-free. But HSAs actually have even more tax advantages than your 401k does, and it's important to be aware of that. When the time comes and you need to use those HSA dollars for qualified healthcare expenses, you are also withdrawing those tax-free, and so there's an additional benefit to that. Further, for companies that offer HSAs, and many do offer this as a benefit to their employees, companies also reap a benefit, a pre-tax benefit on their payroll taxes. So HSAs benefit everyone, the employees as well as the companies that are offering them.
Yeah, I mean, it really is just a tremendous asset.
Yeah, they really are. I mean, HSAs benefit everyone in so many ways, but we're going to get more into that, I know, as we go on.
Oh, of course. And what's coming with that benefit and the advantages, I think one thing is that it's security and long-term savings for unexpected health expenses. Maybe when you get older, you can have something happen to you, or even I think of it as, I had braces growing up, and I don't have children at the moment, but I know down the line, if they have my teeth, they're definitely getting braces. So moving down the line, you can start saving for certain things even like that. And even for affordability, they tend to come with lower monthly premiums. So you're spending less each month, but then you're also putting money away for growth. And as you mentioned, major tax savings. And they're flexible. Mm-hmm. And one of my favorite parts about them is that they're controlled decisions. You control the contributions and the use of it. I think they're pretty transparent and portable in the sense that the money's always yours. And even if you don't use it year to year, it continues to stay yours.
Yeah, absolutely. And I think that's a really key thing that distinguishes health savings accounts from other pre-tax health benefits, and that is that an HSA belongs to you. It belongs to the employee. So it doesn't matter if you change companies, even if your new company doesn't offer health savings accounts as a benefit, you can still have yours, absolutely. And your healthcare, your TPA or HSA provider will work with you to make sure that stays in place. So it's not anything that you need to worry about losing. It's absolutely just like a regular bank account that you own, that you have control over, and it stays with you wherever you go.
Exactly. And I think, knowing these advantages, we have some people that, they can't really decide if it's right for them or not, or an employer can't really decide. What are some ways you have guided people through deciding, from an employee perspective as well as an employer's perspective?
Yeah, so it is an important consideration, and with any financial decision, you want people to make an educated decision. So some of the key things for employees to look at are, first of all, is their company offering multiple insurance plans? Some companies will offer what we call a health savings account compatible or HSA compatible insurance plan, which would be a high deductible health plan, along with other types of plans. And so in that scenario, employees would want to do some math and figure out, what are the premiums? First of all, what am I going to pay for this insurance plan? What are my typical healthcare expenses? When we're looking at plans, we're always looking at that comparison of what is covered. But then with an HSA, there's a third piece to this, and that is, how much can I save, and what is my tax impact going to be in a favorable way? So that is really an important component to this decision, because what we often suggest, the best way to strategize this, is to look at the difference in premiums that you would be paying between that high deductible health plan, which will have a lower premium, and a more traditional plan that will have a higher monthly premium. And if you are a person who is able to save, you can choose that high deductible health plan, get that lower premium, and then put the difference, that premium amount that you would have otherwise paid, put that difference into your HSA. And not only now are you saving for future healthcare expenses, but you're in effect giving yourself more money because you are also saving that taxable income, the tax that you would have paid on it. And then, as we mentioned, as time goes on, you can invest those HSA funds. And again, that is tax-free. So we often find when employees are doing this comparison, it's almost a no-brainer. And the key thing is looking at the difference in those premiums and allocating what you're saving on that premium into your HSA for the future.
Of course. And I think, down the line into the presentation, we'll further discuss, especially from an employer's perspective, in terms of talent attraction. But we'll dive deeper into that later on how to make that decision. So real quick, some eligibility basics. We don't, right? We don't have to go too deep into these, but you must be on a high deductible health plan that is qualified, like you mentioned, be paired with an HSA. You cannot be under any other health coverage, not enrolled in Medicare, and cannot be claimed as a dependent on someone else's tax return. So just a real quick high level of that. As you can see on the left, from 2019 to 2020, for an individual, the minimum annual deductible only increased $50, and the family only increased $100. So year to year, they're staying around this minimum annual deductible. Now, when it comes to opening an HSA, Cecilia, as an employee of HealthEquity and as HSA gurus, as I like to call them, I'm going to send this over to you if you could give us some basic steps on what it looks like to open an HSA.
Sure. Yeah. It's really similar to opening a bank account, really, because that's basically what it is setting up, going through that process, just like you do with a bank account, where you have to do the customer identification process that was put in place with the Patriot Act a few years ago. And once you've done that and established your account, then you can contribute into your health savings account in a number of ways. Again, if your employer offers this as a benefit, you can do it through payroll deductions, which is the easiest way, but that's not the only way. We find that a lot of employees, will do a lump sum contribution into their HSA. You can simply send in a check, for example. And that's really popular at the end of the year if you've got a bonus or maybe, expenses were less than you thought, and you can put some more away into savings. And as we pointed out already, an HSA is one of the most tax-advantaged ways that you can save money. So we often find that people will do that at the end of the year, putting in more funds into their HSA up to the max, of course. And we know that there is a maximum contribution limit on it. But it really is that easy.
It really is that easy. And I think, moving forward, what makes it so easy is having the support systems. Like for myself, I'm 24, and when I graduated college, I thought I was going to ride, my parents' health insurance for as long as I could, and ride it at least until 26. But when moving forward, when I had this HSA option in front of me, I realized how crucial this would be into my long-term savings. Millennials, yes, we do love our avocado toast. But we graduated with tons of student loans, so we know how important it is to save and make sure that, we're providing for a future, get our loans paid, but also once those are done, have something else besides a 401k. And the advisors with HealthEquity were so helpful with not only just setting up the account, but also that you can invest with your HSA. And coming from a former science degree, I didn't really know much about investing. So they were super
you and
helpful.
Many people, Olivia. Yeah.
Exactly. And I think that was just such a great option because I know how important investing is, and I needed that help. And I didn't want to be too much, playful with my money. I'm a little bit more conservative with it. And they were right there to guide me and kind of break down what it was going to look like in terms of investing. And it was just such a great added value.
Yeah, I'm so glad you say that. And thank you for that praise, Olivia. I appreciate it, because there is a range of experiences when it comes to what people are comfortable with, what their knowledge is regarding investing. And that's why we at HealthEquity offer a range of tools to help people figure that out. Certainly, there are the folks who absolutely know what they're doing. They're comfortable. They can log right in. They can move money around. They can take advantage of our many mutual funds, Vanguard funds to invest, and they are good to go. And then you have folks who need a little bit of guidance. And we have something that we like to call GPS, where basically just, based on their risk tolerance, we ask them some questions about their goals for these funds, and then we make suggestions to them. We're helping them figure out where to go, but ultimately, they are still in the driver's seat and making their own investments. And then for some folks, they really want us to take care of it for them and even to actually make those investments. So we will do that. Again, asking questions, finding out their risk tolerance, their goals, and then based on that information, we will actually make the investments for them. So I think having a range of options like that is really important because, as you point out, Olivia, not everyone has that experience, but some do. And so it's important to give people either the support that they need or the opportunity that they want to invest the way they want to.
Of course. And I think especially right now with everything going on with the stock market, I mean, they were very transparent. It's updated emails on, what's going on, and just kind of having that guided support throughout the lifetime of your account, even when things aren't looking so great in the stock market. They're there to support you and kind of be very transparent in how your money is looking, which is, I think, is wonderful.
Right. Right. Absolutely.
Yeah, of course. And so moving on to contributions, they are deducted when you file your income taxes. And I know I use TurboTax this year, and they made it super easy. They had a whole portal for HSA, qualifications. Again, I'm not a big finance person, and they did everything for me, and it was super easy. And of course, contributions are made monthly. Cecilia, do you think you could expand maybe again on how to determine contributions from both an employer's point of view as well as an employee's?
Sure, absolutely. So we haven't talked that much about the maximum. There is a maximum contribution limit for health savings accounts. So this year, if you are a person with single insurance coverage, you can put up to $3,550 into your health savings account. If you have family coverage, you can put up to $7,100 this year. Of course, that doesn't mean you have to put that full amount. Again, really depends on what your situation is. And, there are several factors that people are going to consider. I really encourage them to first consider what they would have otherwise been paying for their insurance, for those premiums, and to allocate that into their HSA. But also anticipated healthcare needs are really important. People can be at different stages in their lives. Maybe someone has got regular prescriptions that they need to pay for, or someone has a surgical event coming up that they know is going to cost a significant amount, whatever it is. So certainly the HSA can be a really excellent planning tool in that way. And again, giving yourself that tax advantage. From an employer's perspective, offering an HSA accomplishes several things. Number one, financial, as we were talking about, reducing payroll taxes. So an absolutely key bottom line product for employers to consider. But also, HSAs are growing by leaps and bounds. I think last year, I want to say nearly 3 million individuals added HSAs in 1 year alone. So absolutely, it's the fastest growing pre-tax healthcare product. And I think that employers, as they look for ways to retain employees, to increase loyalty, to provide added value to their package of benefits, HSAs are a very important and increasingly attractive component of that.
Of course. And, and with these contributions, of course, like you mentioned, come with the limits, the overall limits. And some things, the whole point of it is to use it for qualified medical expenses. So obviously some taxable expenses include non-health related expenses. And at the end, right. I know we talked about this the other day, as of right now, over-the-counter drugs without a prescription are considered a taxable expense. But things are changing constantly, right, Cecilia?
That's right. Especially right now with the coronavirus, Congress has been looking at making some important changes. One of those changes has already been passed, and that is that now if you are covered by a high deductible health plan, that plan can pay for testing and treatment of COVID-19 without jeopardizing your HSA eligibility. So that has been a change to high deductible health plans. Some other things that they are considering, as you pointed out, making over-the-counter drugs eligible to be paid for with your HSA. Another one is telehealth. Absolutely right now, telemedicine is becoming very important for a lot of folks, and that is something that can also be paid for, be covered by your high deductible health plan. And then finally, something that we've been seeing a lot in the market is some people call it that concierge doctor or direct primary care, and there is also legislation under consideration to make that eligible, an eligible HSA expense. So some really positive changes under consideration that I think will make HSAs even easier to use and be able to use them for more expenses that are really important to folks right now.
Yes, thank you so much. And I think moving forward, as things change, updates will come through, so you'll be able to understand, what your limits are and, new things that you can move forward with your HSA and what they'll be able to expand on. Moving forward, we do have navigating life events. A big part of HSA is that the money is yours. Yet things happen. Your job could change to a company that doesn't have a high deductible health plan, or you could go through a divorce where an HSA is owned by one spouse, Or your employment can change and you leave to another job that also has an HSA. What do you do with that money there? I think this is where advisors really come in handy to, help you just beyond the investment portion of your HSA, but to also navigate these changes, correct?
Yeah, absolutely. I mean, there are definitely some sort of tricky situations where we're not sure what we can do with our HSA. I mean, with divorce, for example, yes, if you're divorced, an HSA could potentially be split with your spouse. They would have to open their own HSA, but those funds could be transferred and still be tax-free. It's not a tax impact to either spouse, and both can still use their HSAs to pay for dependents. So nuances that, I think you need a trusted HSA administrator to be able to provide guidance on those kinds of situations.
Thank you so much. So if anyone has questions on here, we're actually going to open up our question portal for right now, not only on the navigating life events, but anything we've discussed so far. Melissa, is that true? We have a couple questions so far?
Yes, you do. So first question is from Kathy. Her question is, I am enrolled in a high deductible health plan for employee plus spouse through my employer, and I have an HSA account set up through my credit union. I have been contributing to my HSA at the family level, but my husband recently became eligible for Medicare in December of 2019. Does that disqualify me from contributing to my HSA at the family level in 2020 because he is covered by Medicare as his primary plan?
That's an awesome question. I'm so glad that you asked that, Kathy. So no, it does not impact you. Even though you've got family coverage, the only thing that is impacting your HSA eligibility is your particular coverage. So as long as you still have that family coverage insurance, you can contribute up to the family max. It doesn't matter what's going on with your husband. You are still fine to contribute up to that max into your HSA. Great question.
Okay, the next question comes to us from Jody. As a company, can we offer both the HSA with a high deductible plan and a low deductible plan so employees who aren't comfortable with the HSA option can have other options?
Absolutely, and many companies will do that. For whatever reason, they know their employee populations, and they really feel that it's important to offer a range of options, and that is perfectly acceptable. Those who will select that high deductible health plan will be eligible to open and contribute an HSA, and the folks who don't won't. So that is fine. Everyone can choose the options that are best for them at that time. Did we lose you, Melissa? Or maybe you're still on mute.
Okay, so sorry. Yes, that was the last question that I saw. But I think, did you have any questions from did anyone reach out to you, Olivia? I'm not sure.
Yes, so I did have a question beforehand, and it was saying that if you already have a 401k, why would you bother? This is something that we've heard before. Why would you bother starting another savings account? Why not just have the 401k and focus on investing most of your money into something like that?
Yeah, I think that's a really important question. And so there are a couple of things that can impact that decision. One is many companies these days are putting in either an employer match or sometimes just a flat contribution into their employees' HSA. So if your company is doing that, you don't want to leave that money on the table. You absolutely want to get that employer match or contribution that is being offered. So that's one reason. Secondly, as we were talking about earlier, with an HSA, you've got additional tax advantages that you don't have with a 401k. So you really want to strategize those two things together. And in fact, what we're seeing is that a lot of financial advisors are actually offering both of those together and really strategizing and suggesting to their to their clients, contribute into your 401k up to your company's match. And then if you have additional funds to save, put those into your HSA and get the most tax advantage that you can there. And that way you are really maximizing the opportunities available to you with both of these vehicles.
Great. Thank you so much. And we actually got one more in. And it says, can I only use my HSA for my medical expenses? What about my dependents?
Yeah, so no, you can absolutely use your HSA for any tax dependents that you have. Absolutely. That's a great way to use the HSA. And honestly, that's, I would say for parents, that's probably how most of us are using your HSA. I have a teenage son who has made more visits to the ER than I care to admit. And I'll tell you a couple of times that HSA has come in really, really handy when we've had, broken shoulders and ruptured spleen, et cetera. So yeah.
Et cetera.
Yeah, no, exactly. But I'll tell you, I mean, all joking aside, I was very, very grateful to have those HSA funds when I needed them. So absolutely.
Great, thank you. And we will have another question portion at the end of the presentation, so feel free to save them for the end. And in terms of employee savings, so for overall savings, it's a lower monthly premium. So like you said before, if you were used to be on a lower deductible and you had higher premiums, you can put that allotted amount over into your HSA. And I think about also in this climate we have right now during the COVID-19, unfortunately, a lot of companies are having to have layoffs. And come May, it is going to be the class of 2020 coming into the workforce. And as Gen Z and millennials, we do have our stigmas, but one thing we do know is how important benefits are. And we don't really require less healthcare services compared to older generations. So knowing we can pay that lower premium, but still have that what if covered, as well as having savings behind it, it's going to be a huge talent attraction tool for this incoming workforce. Anything else you have, Cecilia, on top of that?
Yeah, no, I think that's really important. And, I'm really happy to see that this generation is more, I think, savings conscious, more conservative in that way. I don't know if you've seen the statistic, Olivia, but apparently, I think for the average American couple, they will need about $300,000 to cover their normal healthcare expenses in retirement. So that's a lot of savings needed to get to that point by the time you retire. So we always encourage companies that sometimes will say to us, oh, I've got really young and a young employee population. They're healthy. They don't really need a healthcare benefit. And I'll say, hold on, let's look at the long term. Because by doing that and educating your employees, you are really giving them a valuable and important opportunity to start saving when they're young. And that's really what the HSA is all about.
Exactly, and just having that educational tool to let your employees know that this is an option for them. And I know we've mentioned it before, but in terms of employer savings, I think one of the major thing is the payroll tax cuts, correct?
Yes, absolutely. So it's not just a financial vehicle for employees, but it can really also help the bottom line for companies, in addition to all the other things we talked about, employee retention and augmenting that benefits package, et cetera. It does actually bring financial savings. So important to look at it that way.
Of course. So for moving on to potential savings at 65, I think one of the best things you can do is just have documentation just to avoid any kind of possible penalties, making sure that you are using it for qualified medical expenses and keeping those receipts when it comes to year-end taxes.
Mm-hmm. Yeah, so if I can just interject there for a second, one of the other things I love about health savings accounts, and if you're savvy, you can really strategize as well, and that is that health savings accounts can be used to pay for qualified healthcare expenses in the distant past. So let's say that, again, going back to my example, my son has his skiing accident, he breaks his shoulder, he requires surgery, but you know what, I've got funds on hand, I can cover the deductible, I don't need to dip into my HSA this year. Awesome. I'm still going to keep that receipt, and in future years, if I find that, you know what, I do want to take a couple of $1,000s out of my HSA, but that particular year I don't have high healthcare expenses, I can actually pull that receipt from this year out of my box, if I'm keeping it in a shoebox, or maybe I've got a photo of it on my phone, And I can
A little
now
old school
reimburse
there.
myself. Yeah, exactly. But I can reimburse myself at a later date for that expense. And that's something really important to be aware of. And HSAs are the only pre-tax healthcare benefit that let us do that. So saving receipts, keeping track of those things is really important and can give us a huge boost later on if we do need those funds.
Of course, I think this is such a unique benefit to the health savings account.
It really is. No other healthcare benefit offers that.
Of course. So moving on to qualified medical expenses. Of course, we have annual physicals, body scans, x-rays. These are when I first opened my HSA is what I kind of expected to be as options. We'll go back to that. But moving forward, we also have things that kind of surprised me in terms of family planning, from birth control pills to pregnancy tests to post-reconstructive surgery, and then moving on to certain therapies that wouldn't be normally covered by a regular health insurance plan, chiropractors, acupuncture, any kind of alcohol or drug therapies, especially when it comes to prosthetics. I have family members that use prosthetics and they have a child that has an artificial leg. He's going to grow up and he's going to need to get resized for another prosthetic, and they are very expensive. So this just helps you in long-term expenses for that as well. And in terms of just dental, I mean, thank God I can't use it for whitening my teeth, because I think my account would be drained, because that's what I would use all my money for. But it also goes, hearing aids and specialized TVs and telephones for those who have hearing deficiencies as well.
Mm-hmm. Yeah, you know what? It's interesting because there are so many things that we're really not aware of that can be paid for with your HSA. I like to say that about 90% of the things in a drugstore are eligible to be paid for with your health savings account. You've got a really good list there up on your screen, Olivia. And, I would add even things as mundane as your contact lens solution could be paid for with HSA funds if you want to do that. Band-Aids, well, you do have bandages on there, but yeah, even regular Band-Aids. So there's quite a long list of things that you can use your HSA for. And the other thing to remember about that, of course, is that those funds are tax-free. So it's almost like giving yourself a discount equal to whatever your tax rate is on those expenses. So if you're a person who is spending your HSA and you're not in the savings mode, you are still saving yourself a lot of money by funneling those funds through your HSA before you spend them on these qualified medical expenses.
Exactly. And I can't stress it enough that these lists are always expanding. I know they're trying to put feminine products, as you mentioned, on the list as well moving forward, because as certain people know, it certainly adds up. And I think it's just such an added value that they realize how important health savings accounts are, and it's more things should be eligible on it. And I think they're making great steps towards that. We're going to go back a slide.
There's a lot of energy in that direction.
Of course. And for some case studies examples, I know I've given a couple personal experiences, but Cecilia, could you expand on maybe some clients or situations that you've worked through to help people, maybe someone who has more dependents or started an account closer to retirement age versus a millennial?
Mm-hmm. Yeah, absolutely. So I'll just share a couple of little stories that I have here, contrasting, I want to start out with, a young employee, Justin, 28 years old, very healthy, works out, and he was able to put in $1,000 a year into his HSA. That's great. His high deductible health plan had an annual deductible of $1,500. And so in the first year that he had his HSA, he was able to put in his contribution. He did end up having healthcare expenses that year of about $500, but $350 of that was preventive care, so that was covered. And the remaining $150, he did use his HSA to pay for that. So that left him, out of the $1,000 he'd put into his HSA, that left him with $850 that he, that stayed in his HSA for the following year. Then when he put in, again, his into that contribution. He had $1,850 in the second year. And then again, he ended up having some healthcare expenses totaling $300, and did pay for those using his HSA. And so by the end of that second year, then he had $1,550. So the point I'm trying to make here is simply that, he may not have been able to contribute as much as some others. He was certainly nowhere near the maximum limit, but you can easily see how someone like Justin is accruing those funds in his HSA really pretty fast. And eventually, we hope Justin will invest those funds and reap even greater benefits and really put himself in a good position if he either does have a significant healthcare situation, or once he gets to retirement and his healthcare needs change at that time. So I think that's a really good example for young folks. I'm also thinking about another case. This was a woman, we'll call her Angela. She's 62, good health, on her own, and she ended up getting into a car accident. So in the second year of her HSA, she had very significant healthcare expenses. So just to kind of describe her situation, she was putting in $2,000 into her HSA. In her first year, she had about $350 in expenses that weren't covered. She did use her HSA for that, and so it left her with $1,650 that continued to the next year. Then she added again her $2,000 contribution, and that was the year that she ended up having lots of healthcare expenses as a result of her accident, nearly $13,000 actually. But because of the combination of the savings that she had in her HSA, so at that point she had $3,650 plus what her insurance covered, she ended up paying, out of that $13,000 expense, she ended up only paying $860 that was truly out of pocket. So I think that's a really good example, even in just her second year with her HSA, of how that was able to prepare her, and give her what she needed to cover what was a very unexpected healthcare event. And that's just in 2 years. So I like to talk about those two examples, a young person, an older person, the young person not having significant healthcare expenses, the older one did. But I think you can see there how in both cases the HSA really served them well. And we haven't even talked about, a family scenario which can also be very different. But I think that what's important is just that, strategizing your HSA for your own situation can really provide important benefits and ease that burden when you do find yourself with healthcare expenses, significant healthcare expenses.
Definitely. And I think one thing we definitely want to mention in terms of some examples right now is regarding the COVID-19. I know you have, heard a couple of different things going on with the IRS in terms of your high deductible health plans. Could you let our audience know a little bit what's going on currently right now?
Yeah. So they, Congress has been very responsive on this. Of course, there's a lot of energy around being responsive to the current situation and making sure that both health insurance and HSAs can help Americans do what they need to do to face the pandemic. So one of the first changes that was made was that testing and treatment of COVID-19 would be covered by a high deductible health plan and would not impact HSA eligibility. So as we know, with HSAs, you can only contribute into your HSA if you are covered by a high deductible health plan or what we call HSA compatible health plan. So there are lots of parameters about what that health plan looks like, and they're pretty strict. So if you don't have the right coverage, you can't contribute into your HSA. So changes like this, adding the testing and treatment of COVID-19, are really important because letting Americans take advantage of those new insurance rules, but also making sure that it doesn't impact their ability to contribute into their HSA. So that one has already been passed. Some of the other things that were talked about in the last few days, and actually might have been passed in this last package, but I haven't seen any notice of it yet. I haven't seen the details on it yet. But the telemedicine is one that was being considered. There was a lot of support for adding that one in, and of course we all know why. I mean, that's everyone is going to telemedicine now. And then, as I mentioned, also the concierge doctor service or direct primary care was something that was also being considered, as many people are going to that model for their primary care physician as well.
Great. Thank you so much. And of course, we'll open up one last time for any other questions. Anything specific to the COVID-19 or your group, feel free to respond to us after. Melissa, do we have any questions coming in at the moment?
Nope, no questions at the moment.
All right. Well, thank you, ladies. I think that kind of rounds out our presentation then.
Yes, thank you so much, Olivia. Thank you so much, Cecilia. Everyone who attended today, thank you so much for joining us this afternoon to learn a little bit more about HSA plans. Be sure to check your email in a couple days. We will be following up on the presentation to see if you have any additional questions, or if you didn't feel comfortable asking it today, we're more than happy to take the time after this to answer any questions or concerns that you might have. You can always reach out to myself, Olivia, or Cecilia, and we're happy to help. So thank you.
Thank you, everyone. Thank you, Cecilia.
Such a pleasure. Absolutely. It's been a pleasure. Bye-bye.
Enjoy your day. Thank you, everyone.
Have a good rest of your week, everyone. Bye-bye.